Now we know our rules of debits and credits, we can now enter transactions into the ledgers. So the rules of double entry accounting, which we've learned before, there's two of them. Rule number one is every transaction must be recorded in at least two ledgers. So it could be two, could be three, could be four, we'll do up to five. And those ledgers must be from the elements of accounting: assets, liabilities, owner's equity, negative owner's equity, revenues and expenses. And what we know is that every transaction must have at least one debit and at least one credit, and that the total debits must equal the total credits. So for example, we could have one debit to account 1 and one credit to account 2. Easy. We could have one debit for 1100 to account 1, a credit to account 2 of 1000, and a credit to account 3 of 100. So there we go. It says it just has to be at least two ledgers. We've got 3, at least one debit, there it is, at least one credit, we've got 2, and together 1100 equals 1000 plus 100, so our total debits equal total credits. When we process sales, we'll actually have to do 5 things, but we'll get to that. Debit here, this is an example of that. We've got a debit of 2200 matched up with a credit of 2000 and a credit of 200. So there we've got one debit for 2200 matches these two. And then we've also got a debit for 800 and a credit for 800 as well. And total debits at 2200 plus 800, that's 3000, and the credits are also 2000 plus 200 plus 800, that's 3000 as well. So that would actually be an example of a sale. So we'll give these accounts names later when we do that. But the point is, we've got at least 2 ledger accounts for every transaction with at least one debit, one credit, and the total debits must equal the total credits. So every ledger we know is a giant T, and it's got to have the following information. We're going to have the name of the account up the top. On the left hand side, that's going to be the debits. On the right hand side, that's going to be the credits. And what we're going to do within that, there'll be a date column, so that's the date that the transaction occurred. There'll be a cross-reference, that's the name of the other account affected. So that can be quite tricky. That's probably the hardest thing when you're learning how to enter transactions in ledgers. And lastly, there'll be an amount, the amount of the transaction. So if we were just to look at an example which we've done, we'd learn to put things in these tables, okay? So we've got purchased a vehicle for $50,000 cash. We had an account called vehicle, that's an asset, it was going up, that was a debit. We also had an asset called cash, which we're paying cash, so the cash is going down. That would be a credit. So we've done our rules of debits and credits in previous videos, and we'd end up with that. Well, what we're going to do now is convert that into these ledgers. So the first thing is, it says there should be an account ledger for vehicle and cash. So we've got vehicle and cash. We've got a date, a cross-reference, and an amount. Now the first one says put the date in. So we've got 1st of Jan, 1st of Jan. Cross-reference, this is the tricky bit. So here in vehicle, I'm going to say the cross-reference is cash. That just means what is the other ledger affected? Well, you can see here it's called cash. And then in the cash ledger, I've written the cross-reference as vehicle. So it says go and find the ledger vehicle, the vehicle ledger, sorry, to find this transaction. And lastly, it was a debit to vehicle there and a credit to cash there. And the thing here is with this cross-reference is, remember there's hundreds of thousands of transactions every single day, is this helps us go and look it up. Because in the real world, you know, we'd have to look it up on the computer. We'd want to know, well, what was this $50,000 payment for here in cash? What did we buy? And it says here, go and see the vehicle ledger. So we could go and look that up. And we would know that we spent $50,000 on a vehicle that day. And that is the point of the cross-reference. So the 3 things to remember are, we're just going to apply our rules of debits and credits. And for each ledger, we're going to put in the date, a cross-reference, and an amount.